A SEP-IRA is the simple and cheap business retirement plan. The employer puts money into IRA accounts for eligible employees. It feels like a traditional IRA on the employee side, tax-deferred growth, but the contribution limits are much higher because it's an employer plan. On the EA exam, watch the big idea. SEP equals employer-only contributions, and it must cover eligible employees. Timing is a favorite test point. A SEP can be established as late as the due date of the employer's tax return, including extensions, and still count for that year. The contribution is also due by that same deadline, including extensions. And the plan document is usually just a written agreement, often the IRS model Form 5305 September. Coverage rules are where people get burned. If you set up a SEP, you must set up a SEP-IRA for each eligible employee. There's no opt-out just because an employee doesn't want it. And each year you contribute. You contribute for all participants who had qualifying compensation. That's the trade-off for the simplicity. Easy administration, but mandatory coverage. Now the eligibility tests. An employee is eligible if they're at least 21, worked for you in at least 3 of the last 5 years, and had at least $750 of compensation in 2024 and 2025. You can be more generous, like age 18, but you can't be more restrictive. Permitted exclusions are limited, like certain union employees and certain non-resident aliens with no U.S. source income from you. 2 more core rules. First, SEP contributions are employer only. No employee salary deferrals, no catch-up contributions. Second, vesting is immediate. Once the employer deposits the money, it belongs to the employee right away. On the exam, if you see employer can restrict distributions or employee contributes through payroll, that's not a SEP. Finally, the same percentage for everyone concept. In a year, the employer contributes. The contribution rate must be uniform across eligible employees. So if the owner gets 10% of compensation, eligible employees generally get 10% too. That's why SEPs are popular for solo owners, but get expensive once you have staff. Also note, Secure 2.0. SEP-IRAs can now allow Roth post-tax contributions if the plan permits it. Quick real-world setup example. Herman has a full-time job with a retirement plan, but also runs a profitable weekend photography business. He can still set up a SEP for the photography business for himself and for any eligible employees of that business. On the EA exam, don't mix employers. Being covered at Job A doesn't stop a SEP at Business B. What is the latest date that a business can establish a simple IRA for its employees? The choices include September 15th, October 1st, December 31st, and April 15th. Remember, this is simple IRA timing, not SEP timing. Think about it. The answer is October 1st. A simple IRA generally must be established by October 1st for the calendar year. A tempting wrong answer is April 15th, because that sounds like a tax deadline. But that tax return due date with extensions rule is for SEP-IRAs, not simple plans. Summit Climate Solutions has 110 employees and all earned more than $5,000 last year. They want to establish a retirement plan. Which plan is not allowed? A 401k, a defined benefit plan, a SEP-IRA, or a simple IRA? Focus on the employee count rule. Think about it. The plan that's not allowed is the simple IRA. Simple plans generally require 100 or fewer employees who received at least $5,000 in the prior year. With 110 employees over that threshold, they're out. SEP-IRAs don't have that 100 employee cap, which is why that option is tempting.